So again, kind of the flow of this training event. I want to just go through the slides, explain everything in a static environment here, talk about the different scenarios that goes on with the strategy and the management behind it, and then what I'll look for to exit the trade. Oftentimes I'm always looking for the 15 to 20 pip limit, but I'll take into account where our other band shades are or support and resistance, and kind of modify those areas a little bit as well. Like I mentioned earlier, this is an active trading strategy. So if you're familiar with the matrix, and actually, can I just get a kind of a show of hands in here? Just type a Y in the chat if you are familiar with the matrix. You've been using it now. We've got about 60 people in here. I recognize a lot of the faces. So I know a lot of you guys are regular users of the matrix. And then if you're not, if this is all kind of new to you, just type a no or an N in the chat, just so I got an idea of who we've got in here. Okay, so the primary strategies, and for those of you that are completely new to what we do, and you're kind of seeing all this stuff for the first time, we've been trading this form of strategy for a little over 5 years now. The newer software is in beta release, but it's a newer, improved version of the old one. We've built in a lot of new features. So although the platform is new, the strategy and methodology behind it has actually been around for quite a while. And Armando, who's our chief trader, has been using it for, gosh, going on, it's over 15 years now. So an active trading strategy is basically a strategy that where you've got several opportunities. It's not necessarily where we're trading those high volatility moments like we do with our what we call passive strategies with the matrix. The 5-minute, the scalping strategy that we're talking about today is taking advantage of a short-term reversal. Short-term for us is usually under 20 minutes to a half an hour. A lot of these trades, will happen within that time frame. With this scalping strategy is actually probably one of the longer time frames that we hold trades. A lot of the stuff that we do that is strictly price action, sometimes we're out of those trades within a couple of minutes. What that means is you've got your, let me get my drawing tool here. You've got this middle zone, which is kind of the white cream colored zone. That's one, and then it recalculated. Recalculates down into here, and then you can see that it widens right here. And so this center white zone is kind of the mean. It's where the price is comfortable. There's not a lot going on. Typically it's range bound. And so what we're trading is when a price moves outside of this zone and finds these levels down here, and we're looking for a bounce. If some of you are seeing a blue screen, hit the top where you're probably on screen sharing, hit slides. And it should bring you over to what we're looking at. So just so if you're new to this methodology, we're looking for a price to move outside of its comfort zone. So like right here where you've got this tight range bound market, we're not trying to guess which way the market's going to move. We let the market move outside of that, like you can see here, and then we're looking at these levels to take trades off of. Now, what we're always trying to do is create rules and criteria to keep us out of situations like this, where we're getting into a trade a little bit too soon. You know, we want to wait for either you've got your first, second, third, and then even a fourth level here. And we'll get into some of the criteria I look for, some of the market conditions that I'll look for in order to trade. So that's kind of, does anyone not understand what a reversion to the mean based strategy is? And I've got the chat over there. You can always just type a Y or an N to answer the question. The more feedback I get from you guys, the better it is. That way I kind of know where to steer this thing. And I have the chat privatized. So, you know, don't feel like there's any stupid questions or anything like that. It's all fair game here. So go ahead and ask your questions and I'll get to them. So we've got a couple people. So we're looking at this white zone is the middle area where the price is comfortable. It hasn't really chosen a direction to move. Once it does choose the direction, we're looking at calculated areas where the price could reverse and go back to that center zone. That's a reversion to the mean based strategy. And that's the primary theory behind what we're going to be talking about here. Does that all make sense? Okay. All right, cool, cool. All right, so as far as position management goes, if you've watched some of the videos that I put out recently, you'll see my stop varies a little bit. It's anywhere between 5 and 10 pips. So when I get into the trade, if you're familiar with this new platform, we have automatic stop and limit placement. So when I click in, my risk and my profit is already defined. And I'll adjust my stop losses based on what zone we're in, which I'll get into that explanation here. You know, if we're hitting a second zone or a third zone or a fourth zone, that's, you know, I'll kind of gauge my stop loss on that, because obviously the further out, the further away, when the price is all the way out here into a fourth zone and it's moved away from the center, the price is like a rubber band. It stretches so far before it wants to kind of go back the other way. So when we get further away from this center zone, the higher the odds are that I'll get a good bounce back that direction. So I adjust my stops and my limits based on that criteria. So again, stops 5 to 10 pips, limits anywhere 10 to 25 pips, and then as far as scaling out, that depends on price action. And I'll talk a little bit more about that specifically here in a little bit as well. We good so far with everything? Just type in a Y if you understand all that, a no, and if you want me to explain anything in more detail. Cool. All right, so let's talk about the different levels. So I've got these, this is kind of just what we didn't really have any specific terminology. I call, you know, the red fibs are sell fibs. So I got an SF1, which is just your first sell level. SF2 would be the second sell level. SF3 would be the third level you'd be looking to sell. And then there's a fourth and a fifth zone up and above these levels. And then it's the same concept on the buy side. You know, buy fib 1 is right here, 2 is right here, and the third level here, and then there's a fourth one, you know, out of your view of the chart. So as far as the rules goes, I look to trade every level. I do have specific criteria I look for on these first levels. again, because you're right near the first level, the price, the direction of the price, how far it's moved and how far it's stretching has not really been set. So your trades in these first zones are typically a little bit lower probability. What we like to see is at least a second level or a third level, and then if you get those fourth levels, those are the types of trades that can usually offer a bigger bounce, where you can look for the 20 to 25 point limit on those trades, still with your anywhere from 10 to 5 points on your stop loss. Just looking at a few of the questions coming in here. Yes, so we do trade at each of the levels, not necessarily every time. I'll get into that as well. So what we want to see is a price that comes down. Like if this price were to come down and hit this first level, it would be something that I would look to trade, probably a smaller position, but because we've came from this level here, so we've got a nice consistent move down and we've got good price action or movement, so we can look for a bounce to hopefully go back the other way. Now if price is kind of, let's say we didn't get this run up right here, let's say the price just kind of faded down into this area, that would be a scenario where I would probably pass up on this first level and look for a second level. The best way that I can explain it to increase your odds with this strategy is look for price movement that's kind of, I mean, normal price action is not going to be a quote unquote whipsaw market, but there'll be good solid movement back and forth, and so you want to see that, and you want those to be good moves of, it depends on the currency pair. With euro dollar, if these swing highs, swing lows are anywhere between 25 and 30 points, that's what I'll look for when we're hitting a first level or even a second level. I want to see a good swing one way or the other to give me better odds that it'll bounce. So the 2+ levels, what that means is, we're looking ideally for the buy fib, the BF2 or BF3. Same thing, SF2, SF3. So the further away from this center zone that we can get out here, the higher the odds that we're going to see a bounce. Does that all make sense to everybody? I know we've got a little, we got a bunch of different backgrounds here. So I just want to make sure that I'm getting all the questions answered. Cool. Looks like all right. Looks like most people are kind of picking up on it. If not, put your question in, and I'll get to it. Okay. Let's talk about price action that we want to avoid. Again, if you're fighting a fresh breakout, that's typically something that I'll look to pass up. If we're if we're close to a very tight price action or a very tight range, and we get a breakout of that level, we want to wait. We don't want to just jump into levels right away. We want to kind of wait, let the momentum die out of that. And for different currency pairs, that's typically a different type of movement. And we'll look at an example right after this. And some of you guys that have been around for a while and went through all of the training and stuff, I'm sure you'll recognize where a lot of those numbers come from. And then the other market that we want to avoid is a low volume or very thin market, and I'll show you what that kind of looks like. Just a market that doesn't have very good price action. And everyone's definition of price action, I guess I should talk about that, because we see people that are referring to price action as basically just chart patterns and candlestick patterns and stuff like that, which technically, I mean, yeah, it's a representation of what the price has done. Price action for us is more of how the price is moving, how far and how fast. It's more trading a raw price movement. And so when I talk in terms of price action, that's what I'm speaking about. It's not necessarily a certain chart pattern or candlestick formation that we're looking for. It's more about how the price moves. So you can see, like, when we're talking about a fresh breakout and avoiding that, this was kind of the beginning of the trading session, and it established a really tight range, and the price was like this for quite some time. So there wasn't a lot of movement. And anytime you see, especially when a session is just starting, so this was basically the start of the London session. So anytime you're coming into a new session, there's a really tight price action, and then you get a breakout of your range. That's when I would avoid the first. It's depending on this move. This move wasn't very big, so I wouldn't have taken this one. What you're looking for, if you are breaking out of a range and going out into these levels where you would consider buying and selling, on this is a pound dollar chart you can see here, I would look for at least a 20 to 25 point move outside of the range here. So you can see that we started this move right around 70. So we would want to be down around 50. 50 would be about your 20 points. If you were waiting until the low of the range, a break of that, your 20 points would be about right down here where we hit this third zone. So that would have kept you out of this trade here and this trade here. This would have been questionable. This may have been something that I would take. I wasn't around during this time, so I didn't actually trade this. And then we came down and hit this level here. And this was the one that finally bounced. Does that make sense for some of you guys that are just kind of starting to look at this methodology and theory behind all this? Do you want me to elaborate any more on that part of it? So this is, anytime you've got a price bottled up in this middle zone, that's kind of a red flag that maybe you want to be patient and look for either a second or third zone entry. Does that all make sense? What we're looking for is more of like this, where you've got swing high and swing low. There's good price action. Again, when the price is running up to these red zones, again, each one of these moves, you think of it as a rubber band, just pulling a rubber band, and it's getting tight and it wants to go back the other way. And that's really any time frame you look at. That's just what the price does. I mean, that's just the cycle that the price will do on any given time frame. Okay, and then the other criteria that I was talking about was a thin or low volume market. And that's when you just have, a market that just isn't really, swinging one way or the other. It's just kind of a slow and steady grind, like this price action is here. And you kind of get this pop up into this zone. But where you're kind of directional here, and the price is just slowly grinding in that direction, those trades are also not ideal. When you kind of get this fade, and then again the rubber band stretching here, that's actually something that not that this one wouldn't have worked out if you were patient. It's just you can expect to sit in these trades that are really low volume or thin market. You can expect to sit in those for quite a while. And typically they don't give you the type of bounce that you're looking for right away. Okay, I've got a handful of questions coming in here, so if you've got questions, keep pushing them in. Yeah, as far as watching the zones, I typically have it pretty zoomed in where I can see the shades. Okay. Yeah, and I think the next slide will answer some of this. So again, we've talked about kind of the market conditions that we want to watch out for. Now let's talk about when we actually do get in a trade and how we manage these trades. So these first zones right here, a lot of my stop management will kind of be based around how much profit potential I have. So if this price were to come down and hit this level, obviously I don't have much room between here. You know, it's I don't even know that it's 10 pips. So I would need to, try if price comes down and hits this first level. If I'm going to trade this first level and go long in this area, basically I need the price to come up, clear up to this area here to give me 10 plus points of profit. And so I'll look at the likeliness of that happening where we've got this high up here. There's a good chance that'll happen. You know, this zone, as it recalculates through here, through this area here, there's a good chance that the price could hit this and bounce and come to the downside. That's always a possibility. But at that point, I'm protecting the position, stop to break even, which brings me kind of to my next point, which is we use what we call progressive stop management, where we're always trying to eliminate the risk. Basically what that means is when we get into a trade, our initial stop loss, may start out at 10 pips, 7 pips, or 5 pips, depending on uh, the trade opportunity. And when the trade is moving in our favor, we are constantly removing the risk by closing our stop loss. So oftentimes I'll get into a trade, I'll put a 7 pip stop in. The trade will kind of work out in my favor. So if I were to enter in this trade right here, and as soon as we get this quick drop down, then I'm going to break even. So I'll take the risk out of the trade. Who already does that? And if not, if you just leave your stop and limit, kind of like set and forget, just put an N. So we've got a bunch of people that already kind of use a progressive stop. Okay, and the reason that we do that is because, again, we're trading raw price action or raw price movement. Go back to that whole rubber band theory, the price is stretching so far so fast, and it needs to find a level to, create a retracement off of, and that's what we're trading. That doesn't mean that, just like this trade here, if we come up and hit this level, we're just trying to grab some points here in between, and then if it wants to continue higher, we don't care. And oftentimes, we're just grabbing a small move in there. So anytime we get an entry like this with good price action, we get our stops in, so we limit our downside risk. If it's going to go above this, we get stopped out, then we're just looking for another entry, better entry up here. So again, we don't want to hold the trade through this whole area here because you're just risking points. Does that all make sense to everybody? And yeah, exactly. So, yep, yep, that's correct. So if we were to get this entry here, at our initial stop, maybe 10 points, that doesn't mean that we're going to hold it with 10 points. As the trade, as soon as we get this retracement back down, let me grab my cursor. As soon as the price comes back down quickly like this, most of the time we're going to break even anytime we're up 4, 5, 6 points. If I'm up 3, 4 points, I'll move my stop to -3, and then I get up 5, 6 points, I'll move my stop to break even. So again, I've got, if you're always trying to eliminate the risk out of your trading, the profits will follow. And the biggest thing that I think that most people take away from that is the better you reduce risk, or the sooner you're reducing the risk, you also eliminate a lot of the emotion in your trading as well, which is kind of the main barrier for a lot of people. And then, okay, so let's talk about, yeah, good point. So let's talk about scaling out. Scaling out is basically when I enter into positions, typically taking two positions. So if I'm wanting to trade one standard lot, I'll typically take 5 minis. I'll take 2 fills, 5 minis each, which equal a standard lot. And we'll jump over to the platform, and I'll show you, I'll walk through some examples and stuff like that as well, and just show you how to change your volume and all that stuff on the actual platform. So we'll get into that. As far as scaling out goes, so if my entry is right here, and I've got let's say a 5 pip stop, and so again, I'm going to look for at least 10 points profit, if not a little bit more. But I know that if I hit this level right here, this could become support. So this would be an area where I may want to take off half of my position. Or if for some reason I'm holding for a level down here at 20, then I would definitely take some profit on this first level. And the reason for that is, this could be the level where it reverses and goes back the other way. This area right here could be the level that it reverses and goes back the other way. We're not sure exactly which one's going to be the level that holds the price. So the idea is to collect some profit, again, reduce the risk, so you if it does reverse and go back the other way, you're not going to take a loss on anything. And then when we're hitting these levels right here, these are areas where you could take half your position, or you could take half your position down here and collect something, and then obviously wait for your limit to get hit and take profit on your full position. Yes, that's correct. Good question. No, I typically only scale out, just half of my position with this strategy. I mean, some of the advanced position management stuff that we go over in the actual training on the matrix and stuff like that. I don't do as much of that here with this. The whole idea behind this strategy is keeping it really simple, and more rules based, in a sense where, yeah, once you eliminate the risk, I pretty much just leave my limits in, and it's either, I take a break even or 15 points. Right. It's not, this strategy is not as intensive of management and stuff like that as the matrix. Yeah, that was kind of this. I have traded a lot more active with this style, and this was basically, the one of the problems we had with the active strategies on the matrix is it was still very discretionary. Not really discretionary, but you kind of had to find your style and find your way. And this is more of a rules-based approach to that, with a more clear-cut criteria. And that, for me, is what I need as well. That's why I've always been, trading passively and stuff like that, and I didn't do too much active stuff, just because it was, I thought it was very discretionary, and for me, I like rules. I like having a clear process to follow. And that was part of the reason that we went ahead and shaded in these areas so that we would know which level we're at and kind of how we broke through the previous ones, stuff like that. Kind of tell a story of the price action. Yeah, exactly. So does that all make sense for everybody? Is there anything that I need to elaborate on? I think I'm gonna need to put the platform up on the projecting computer, the other one here. Mine does not like the recording and having the room open and all that stuff here. Let me get that pulled up. I can try pulling it up on my end. Maybe what I'll have to do is cut the recording. Let's see how it goes. So good question, and this is coming from someone who's already using the matrix, and it's whether or not I look at the PMDs, what we call our price. Perfect, and let me know when I can go ahead and grab the mouse on. All right, so kind of just quickly going over stuff. So we're looking at a euro-dollar chart. That'll say up here in the corner when you have the platform downloaded here. Now, what I was saying, when I'm taking two positions, so if I'm going to trade one standard lot, this is where you would adjust your volume here. So it's at 100,000. If I was going to trade 100,000, I would take two positions of 50K, and that just allows me to break the position up a little bit easier and stuff like that. So now again, if you're new to the platform, this is our OCO order management. So you can have your stops and your limits already preset before you enter in the trade. So, and then if you want it to auto protect, you can have this box checked or unchecked if you want the stops to go on automatically. I almost always have my stops going automatically, actually all the time. I can't think of a time when I don't. So if you want to enter into the trade and you want to have a 5-point stop, all you do is come down and adjust this, and so when you click into a trade, your stop and your limit is already going to be put in for you. Good question. So do I look at the lines, the PMDs basically, on the chart as I'm trading? Not very much. Mostly just the black one. And like when this trade was happening, we were hitting this zone here. It was kind of recalculating, and I waited till we were down closer to the black PMD here, just because I knew if I had my stop below this level, I'd have a better chance, which I did. I need to see if it picked off my first my first limit. I don't know that I would have got limited out for the full position here. But when we started this, we were in this position right here. So yeah, and as far as the charts that I look at, typically, you can, even if we go back and we look at this session here with just one currency pair, I mean, there was a lot of different trades on just one currency pair. So I find that looking at euro dollar, pound dollar, sometimes, if there's good movement in dollar yen, I'll watch that as well. And maybe in like euro yen. Most of the time, though, if I'm looking for my 15 to 20 point goal per day, you can do that with even just watching one currency pair. At most, euro dollar and pound dollar. Yes. So we got a question in here. Um, don't you watch the matrix? And the answer to that is yes. I look at the matrix most of the time. It makes this information much easier to view. Um, However, when I'm outside of the normal trading hours, so the main time that I'm focusing on the matrix is anywhere from 8 a.m. Eastern time to about 9:30, 10 o'clock Eastern time. That's kind of when we have the most volatility, and I'm looking at that. From there, I move to more of a what we call our active trading style, which is where it's not so much trading the extreme volatility. It's just trading more levels. And for that, I just all I need to look at is the charts here. So that's kind of this strategy is kind of a good segue in leading into the matrix. It helps with understanding the matrix because basically what you're doing is you're getting very familiar with all of this information on just a 5-minute time frame. And then once you understand all that, you just apply the same concept to your 1 minute, 5 minute, 15, 1 hour, and 4 hour to give you kind of the big picture of what's going on in the market. So yeah, a lot of, and especially now with Fxpm 2.0, we're able to see these zones, these levels in the middle zone. So you can still trade, actively, and you can just watch the matrix if that's what you're used to. Yeah, it all comes as one. I'll get into that. I've got a few questions as far as if all of this stuff comes together, and it does. Yep. I'll get into all that. I know with the beta release, I've personally have had a ton of questions as far as what's included and all that stuff. So I'll touch on that towards the end. Yeah, and to go back to that, again, I typically all I'm looking at is this black PMD right here. And if you go back and look at it historically, you'll just see a lot of price action around this level. So anytime you're trading, it's like this trade here, when it comes down and hit this zone, I'd want to have my stop below this black PMD. Because again, the best odds of this trade bouncing, it could have stretched down and hit this level here. It just so happened to hit the Fibonacci level and bounce. And that's, you know, you've got to find out how you trade the strategy best. I have a lot of trust in it. When we hit the levels, I'm typically entering into the trade, and I'll just try to keep my stop below these areas. Some people like to wait for confirmation, and really there's really no such thing as a confirmation. It's just kind of a term used for waiting for the price to go back in your favor, or looking for candle closes and stuff like that. But for us and how we trade, you're always looking for the best fill and the best price that you can get. So if this is the level that you're looking at right here, as soon as that price is hitting that level, I'm executing the trade. And I understand that we could get down to this black PMD, and I'm okay with that because my stop loss will be down below it, but within my 10 to 5 points. Does that make sense? We've got a few questions about that stuff. Just again, if it's not clear, put in a no, and I can elaborate more. So let's go back. I mean, let's even right now we can look at where we're at and what we would do, moving forward. If this price were to climb back up into the white zone and hit this red zone right here, that would be a trade that I would likely take because we're coming from, um, you know, we're coming from down here. If we got a steady push up, I would expect that level could give us a bounce. So that would be my first area I'd look to enter short. And then if we were to drop down here to the 20 level, that would be an area where I'd look long. So again, with this strategy, you're not trying to predict anything. You're just anticipating, whether the price goes up or down, you have a plan and you have an idea of where you would enter and then the way that you would manage the trade. And by that I mean, you would get in with your 10 or 5 to 10 point stop. And if you're just getting started, I recommend just using 10-point stops or 8-point stops. A 5-point stop, you've got to be very disciplined, in particular with your entries. And I find even a lot of the times I'll enter with a 7 or an 8, 7-point stop, and then if the trade sits there for a little bit, I'll move it to 5, and then as the trade works in my favor, I'm constantly reducing and eliminating the risk. So that's a good question as far as scaling into a trade. If I would take a half a position here and then take the other half at that level, I haven't been, lately I've been executing full position at the level. But again, if you like to scale in and cost average, as long as which I know you've been through a lot of the other training stuff, so you've got a good idea of it. And yeah, you can do that the same way we would do with some of the, passive strategies with the matrix. You can apply that to this strategy. Again, I mean, you're familiar with a lot of that stuff. If you're just getting started, again, I focus on one entry and I focus on eliminating and reducing the risk, and then keeping a good risk to reward. And if you're new to what we do, we try to keep a minimum of 1 to 2 risk to reward, meaning when we get into a trade, if we're going to risk 5 points, we're looking for 10 points. If we're going to risk 7 points, we're looking to get out with 14. That way, if you're only winning half the time, you're still able to make some money. The idea is to win a lot more than 50% of the time and still have a good risk reward. And that's when you can find that consistency and more importantly, confidence in what you're doing, because you see the account moving in a good positive direction with a nice smooth equity curve. It's not, you don't have these large swings in your account all over the place, which typically it just creates too much emotion for most people. Yeah, so so when you're entering, yeah, the modify button will come up after you enter into a trade. So if I have the auto protect on, and I just want to make sure, is it cool to, I know this on the projection computer, am I good to trade off of it? It's not an account that you're doing anything with? I just want to confirm. Okay. Okay, so as far as when the price, when you do get your buy or sell positions, um, one thing that I want to talk about as well is when you're looking at a level. So you've got this level here that's at 31. You've got to account for your spread, which is a pip and a half here. So one of the questions that I get, and I had this question a little while ago, is whether I will trade the level itself, because oftentimes, your buy side, your quote is going to be 1.4 pips above where the actual price is showing here. Most of the time I try to get the actual fill at the level, and that'll depend entirely on price action. If we're moving really aggressively towards the level, I'll be patient. I'll wait for the exact quote before I click into the trade. Um, and if we're just kind of barely getting down to our level and we tap it, then I'll go ahead and get in, even though my fill is a pip or two above the actual level. So again, it really comes down to price action, and a lot of that is just, it's kind of more of an intuition of just watching this for going on 7 years now. Let's see. Yeah, the 5-point stop is extremely tight, and like I said, most of the time I'm getting in with an 8-point stop, and then I'm just immediately moving it to 5. If we kind of get that stall, or the price has settled in and we're making the turn, and then I'll walk the stop loss up behind the price to get to break even. Let's see. Yeah, as far as adjusting the stops and limits when you're in a trade, do you need the mouse? I just see it moving here. Yeah, it is in. You can walk it up and down with the arrow keys. I typically, as soon as I enter in a trade, I'll just erase the number and type it in and get it ready, and then hit modify. Yeah, so I'll do an example. If let's say if the price were to go up and hit this red zone, because we've traveled, the price has moved a nice consistent, good consistent price action up to this level, and I were to take a sell position. Again, if I wanted to get into the trade with a -7, I'd go ahead and get this ready, have a -7 in there, and then I would click into the trade. And again, if I'm trading a full lot, I would click in twice, and then I could go ahead and exit half my position as well. See, my stop is already put in at -7 and 19. So if I want to bring this stop down, so as soon as I'll enter, I'll go to my next increment, which is a -5. And then any unmodified changes, your modify button will highlight like this. So it's letting you know that you've adjusted your stop and your limit, but you have not actually made those adjustments. You haven't actually placed that order. So once the trade begins to work in my favor, then I'll go ahead and modify the trade. And if I was wanting to have a 15-point limit, I'd go ahead and put that in as well. Click modify, and your trade has been adjusted. Now, as soon as I make this change, even though the price hasn't moved in my favor, I'm going in and I'm getting ready for my next move. I'll get my -3 ready, so when the price moves in my favor even more, I can go ahead and just click modify, and I'm not fumbling around trying to make changes when the price is moving. So I'm always anticipating my next move, and it's always focused around the risk side of things. It's always, what am I doing next to eliminate the risk? So even if I were to go to -3, I'm always going to be ready for my next move. So if I were to modify this, my next move's probably going to be to break even. So I'm going to just have this ready to go. Does that all make sense? I know if you've got experience with the matrix and you've been trading our style of trading, this is like second nature to you. But we've got a bunch of people in here that are at least new to what we do. So I just want to make sure you guys are crystal clear on all that, so that when you're on your trial or you're practicing with the platform, you can kind of practice some of those tactics. Yeah, so I mean, this will obviously get stopped out if I modify this, but again, I'm always ready for, the break even part of it. So I'll modify this where it break even, and I'll just close the trade there. Yes. Yep. Yeah. So there is a trial with the platform. Most of the people are on it. And I see a few questions from, does it work? So yeah, if it's with the way that the platform's set up, it's got to be, with the original Fxpm and the new version. The You've got to use one or the other. They use the same port to transfer data. So you can test this one, but you'll have to have the other original one um, idle. Yeah, I'll get into that. I'll explain a little bit about what's included with when you get enrolled. I know we've got a bunch of people on here with some trials that have came to an end and stuff like that. So I'll answer all those questions. Yeah, we can go through some examples. We'll go through euro dollar from earlier today. Alberto, yeah, you could probably do that. I think. I don't. I've just been running new stuff, so I don't. I'm not sure, but I would think that would work fine. Okay, so let's go through the price action from euro dollar earlier today. And also, I just want to make a quick note. If you're going back through and kind of looking historically at the levels and how they were used and stuff like that, when you scroll back far enough, you'll notice where you get all these recalculations. Pretty much from that point forward is where you want to actually where it's more of a smoothed level. That's really where you want to look at your price action. So again, we had this run up, hit this level, I mean, pretty clearly. Again, this is where if you're waiting for, when you got good price action into a level like this, if you're waiting for the specific quote, this would have been on the sell side, so it would have been the same, but if this were on the buy side, that's why a lot of times I just trade the level. I go ahead and just enter into it off of this level. And again, first your first level here would have been a place where you would want to maybe take some profit. This, again, anytime you're in the wicks, you're at break even within a couple of minutes minimum. These are 5-minute candles, so anything could have happened within that 5 minutes. Oh, must have grabbed the mouse there. So works back down. This probably would have not been a trade that I would have taken, just because we didn't come all the way down and hit our green zones. We just kind of went into this area here, and we were kind of breaking out from this high here. I would have had to watch this price action, and depending on how quickly we ran up here would have determined that. And but even this level here, gave you real quick points, and then it pushed up. And I like to think of these levels as a door. If you're knocking on a door, or trying to break down a door, the more times that you hit it, the more likely it is to break. That's the same thing with support and resistance, and that's how we trade these levels, is support and resistance. So your first test with good price action is usually your best one. That's when I prefer to take the trade. And then the more times that we hit it, the more likely we are to break through. So keep that in mind when you're considering, which signals you want to take advantage of. And again, as we break through, at first glance, it looks like we just kind of went through it, but you'll notice this decent wick here, and then it came down to as far as this low. Depending on how you're managing the trade, this may have just been, obviously it gave you plenty of price movement to where you could have had your stop down at break even, as the price starts moving down, -5, -3, and then to break even. So when this did push up through, you wouldn't have had any downside. It's a shame we didn't run all the way up here, and then we came in, and you'll notice that even, and this is why we use these levels coming back the other way as targets, because you'll notice they become support, and sometimes that can be the driving force behind making a new high or continuing a trend. So it's not that I would actually trade long off of this, but if I were short, I would look to take profit here. And again, break through. This would have been something I would have at least put something small on, just because we came from so far. Again, the price has been stretched. I would expect some kind of a bounce from that level, which it did. Not a very big one. And then, of course, this level here on a second zone with good price action into it, which worked really well. This I don't know that I would have taken, although it did offer some points. Plenty of time to get your break even in and take the risk out of the trade. And then when we did run up, this one probably, this was a break even, because again, it moved in your favor. You had plenty of time to adjust your stop and limit and take the risk out. And of course, all this here, I mean, we've already hit this level, so there's really no other opportunities here. This price action down into here would have been worth doing something small on. And then we ran up. When we hit this level again, you can see that there was some retracement there, enough to get to break even. And then this this trade was obviously an easy, quick, painless one, with plenty of profit opportunity there. And then we had another run up and test of the high. And I didn't, I was just kind of starting to watch the market around this time, and I didn't take this second opportunity. And then again, right before we got started today, this zone was actually here, and it was recalculating as the trade was happening. I went ahead and got in and was at break even when I started the recording here, as far as having my stop at break even. So it was risk free. I think I had the limit at 52 or something. So I know I didn't get limited out of the full position. And then we broke down into this zone again, but we'd already been testing around this area, so the best would have been to wait for something down here. So does that make, for those of you who are new to the platform, is the strategy clear? Do you understand all the rules around it? And do you feel like you've got at least a direction to move in, and to where you can start to baseline your your trading activity? A lot of the times, especially if you're just getting started in trading in general, the hardest part is to just find a pattern that you can follow and start to measure, so you can get a baseline on your results. What we find, we've literally dealt with hundreds, if not thousands, of students from all different types of trading backgrounds, and we found like the number one problem is it's just most of the time what they're trying to do is completely discretionary, and it leaves you always second guessing what you're doing, how to manage it, and it's plays a lot on the emotions, and that's where the emotion comes into trading. You're not going to win every trade with this strategy. There's no strategy that's going to do that for you. But you should gain a clear understanding and a very clear process to follow. So although you know you're not going to win every trade, you know that, yeah, a bad trade is going to be a -5 for you, and a good trade is going to be, at least 10, 15 to 20 points. So, and that's the idea behind this. If you're already trading, I know we've got quite a few people in here that are already using the matrix and have been for some time. So as far as your relationship with this strategy, I think it's been a great strategy for me in the more active time in the market, as far as when I'm not needing to take active trades, but looking for active trades to take. I prefer this. Good question, and we'll go ahead and we'll get into that as well. Is there any questions on the interface, the strategy, how we manage stuff before I go back to, we'll get in, I'll discuss what's included with just the software. I've got a handful of people typing some stuff in here, so I just want to get these, make sure I've got all these questions answered. So we got a handful. Let me scroll up here. Yeah, okay. So we had a bunch of people submit for the trial, and we process these manually because of our institutional relationships with the brokers that we're dealing with. So I know they were trying to get as many of them out as they could. So you should be seeing those throughout the morning if you've submitted and you haven't got your link to go and download and log in. Is there lifetime training along with? So, and I'll get into specifics on this as far as what's included with the training. But yes, we do provide some training with the software as well. I'll get into specifics because there's two different, depending on whether you do just like a quarterly subscription or an annual subscription. There's some different levels of training. Yeah, so Fxpm 2.0, when if you do get a license, yes, you have these charts, and you can use the dynamic Fibonacci charts on any of the currency pairs that we have in there, which are all the majors and most of all the cross pairs as well. And you can also apply this on longer time frames, or you can do it on a 1 minute time frame. I prefer the 5 minute, but yeah, you can use the same methodology on other time frames. I haven't traded a lot of the other time frames, specifically following just this and just these rules. I can only vouch for the 5 minute and how well I've been doing with it on that, and that's kind of what I've gravitated towards. And a lot of that's come from just over the years. If you've followed us for a while now, you know that in our live training room, we've always had the 5 minute charts up. It's always what we use to kind of get a gauge on price action for the day, and so I was just very comfortable and familiar with it, and familiar with how these levels respond. When will 2.0 be out of beta? We don't have a definite date on that. We still have a pretty good list of features and integrations that we're still working on. And so until we get all that stuff put in, then we'll come out of beta. And that's why the pricing has been reduced significantly. If you're familiar with the original Fxpm, which I'll get into all the details on that too. Okay, let's scroll up through here and get. Let's see. Win-loss ratios on it are pretty good. It depends how you're calculating, your break-evens, stuff like that. I typically just, if it's break-even, I leave it out of the equation. And as far as actually taking a loss or making points on the trade, it's upwards of 80%. The way that we manage the stops is really just to protect against the loss. And you may have 3 or 4 trades, throughout the day that kind of grind against you like this. And if you can just manage those, keep the account from going into the negative so that you can take advantage of these opportunities like this here that are fairly painless as far as getting in and managing your stops how we would, where you reduce the risk and go to break even. That's really what you're holding out for. Yeah, so trading live off of the platform while it's in beta, we've got a bunch of people that are. We're not quote unquote officially recommending it until we're out of beta, but you can be the judge of that. I mean, we've got a lot of people who are waiting for this platform to be released who are already on a live account. I would just use a little extra caution. Again, it's still in beta. We're still rolling out new features all the time. Yes. So let's go ahead and get into the training stuff. I'll get into the slides. I'll explain everything. So this is how the pricing model is. We were able to work out with the new platform. If you're familiar with the original Fxpm licenses were anywhere from 1997 to 3000, plus you had a data feed expense of 129 per month. So with the Fxpm 2.0, you've got two options, and it's everything with the software. So you've got your quarterly license, so every 90 days. That's just a subscription base. And then you've got an annual license. There's no additional data feed or anything like that with this platform. Now with that, you'll have the charting package, so everything that we just went over with all the dynamic Fibonacci, all that, plus all of the normal indicators that any charting package would have. That's all included, the dynamic Fibonacci. How I was using the charts, trading off of the charts, and you can trade off the matrix. That's what we call our Instant Broker Direct module. It's in the platform. Spreads, which I'll elaborate a little bit more. We've got something new coming for international clients as well, which we're going to have some even better spreads on all that. And then automatic stop limit, that's all. So it's all included. So even if you're getting the software just for the Fibonacci's trading strategy, you're still going to have the matrix and all that stuff included, and we'll provide a lot of the training that goes along with it. Now, again, this is the regular pricing. This is where as we roll out features and the platform progresses, this is where the prices are heading. Currently, where we're at today, with the beta pricing, it's still the same two options as far as a quarterly and an annual. Your 90-day license is $297, and a full year is $697. Now, what's also included, you'll have the online training as far as the videos that walk you through step by step and explain how the platform works, explain how we manage the positions in more depth, all that. So there'll be all the training on even more in depth than what we've talked about here on the webinar as far as the Fibonacci stuff. Plus, there'll be all the training for the matrix itself, which will add another 6 strategies to your arsenal in addition to this Fibonacci strategy. Also, one of the things we were contemplating, with just the software, we want it to be. We want everyone who's using the software to be successful. That's why we've also put in the business plan and all that to again create some more structure around what you're doing. I don't know if any of you guys, if you're familiar with that. That's been a pretty crucial part of all of our students who have been through our full training and mentorship stuff. That's a huge tool. And then we also have access to our group on Facebook, which is a closed group. It's for members only. We've got a lot of guys in there sharing trades and just what they're doing. I typically produce other training stuff that I post in there just for our members as well. Now, with the difference between these two packages, for the 1-year plan, we're also including the 30 days in the live training room as well. So again, you can get the platform. You'll have this dynamic Fibonacci trading strategy, and then you will also have all of the live training on the matrices as well for the first 30 days. And if you want to come in, because I know we've got a few that have came in, they've bought the annual license, but they want to get familiar with the platform and start their 30 days in the room, after they've been on the software for a couple weeks. That's totally cool. We can do that as well. So you can get up to speed with all the online training stuff, and then when you're ready to jump into the live coaching that we do on a daily basis, just give me a heads up and I'll let you know, and I'll start the 30 days. Yep. Yeah, so we do have, yes, you can trade, US clients can trade off the platform. We have one of our brokers who's servicing the US and international accounts. Now, we also have another broker that we're adding to it, and if you're familiar with the older Fxpm, the spreads with the newer broker are looking like they may be even better than what we had on the original Fxpm. However, it'll be for international clients. And when we do launch that broker, they're going to be matching, doing a 50% matching bonus up to $3,500. So basically what that means is if you open a live account with this new broker that we'll be launching, we've got a lot of things ready for it. We'll probably publicly launch it in the first of the year. So yeah, yeah. So you can when you deposit, yeah, the 50%, so up to $3,500. So if you were to put in 7 grand into an account, they would match with the 3,500. If you have to meet, there's certain criteria that you have to meet, and yeah, I can send all that stuff over. Hmm. Yes. As far as previous members and license holders, um, we've got. Go ahead and I'll contact you, and there are different options available for you. Yep. Okay, I've got a bunch of questions here that I need to scroll up through. Let's see. As far as the training goes. So how the training works is that there's a few different modules. It's video training. It's very in-depth, so it'll walk you through not only the Fibonacci stuff, but it'll walk you through the matrix as well. Because the idea behind this 5-minute scalping strategy, it's a great strategy to start with if you're new to what we do and how we trade. And then we simply that translates, the matrix just makes it easier to do, essentially. Um, and it allows you to see more than just the 5-minute chart in a very simple format once you're familiar with what you're looking at. So the training stuff, when you get in there, will be all of the, how the matrix works, all the information that it includes, and how that translates over into the charts. Yeah. Yeah, I can get the links for the special. And yeah, yeah, these are the current, this is where we're at currently. They, we don't have a definite time frame as far as when the pricing will go up again. Um, as we get closer and closer to rolling out of beta and adding new features, we'll definitely be to the 997 and 497 very soon. Yeah, I'll get to the questions here. I'm just grabbing the link for a couple people that have asked for it. Yeah, the 30 days in the live training room is for the annual plan. Mm-hmm. Okay, there's the link. You should be able to go to that, and yeah, you can do PayPal. Actually, that's a good question, and as far as I know, if you're in the U.S., that's not a problem. I had a question as far as checking out using the PayPal, their 6-month promotional financing thing that PayPal does. I don't know that they do that for international clients, but I know U.S. clients. So yeah, you can do that, and I know they do no interest for 6 months. So some people choose to just do it in payments. And all you have to do is when when you go through and sign up, just choose PayPal, and then that'll take you to PayPal. And once you're on the PayPal screen, then you can select the zero interest plan. Yep, yep. And yeah, just give and go ahead if you're have more questions, more specific stuff, you can put your phone number in if you'd rather just have someone call you too. If it's too much to type or you just want to know a little bit more about all this stuff that's included, just put in your phone number, and we can have somebody give you a call and get more specific. Yeah. Yep. Yeah, I can get that information together and send over. We'll do that. I'll do that in an email, and that way you can get more specifics on how the live accounts work. Yep. Where are you located at, Alexander? Okay. So you'll actually have a couple of options, and I'll shoot you over an email. Can you send me your email? You can post it in here. It's not public, and I'll go ahead and send you over. Perfect. Um, yeah, there's going to be an additional broker that we're adding, Neil. I'll go ahead and I mean, for right now, you can, if you're just getting familiar with the 2.0 platform, by the time so by the time you're demoed and gotten used to the platform, we should have the new stuff rolled out. We're looking at about a month out. So, most people are demoing for, anywhere close to 30 days, enough to get comfortable, see some consistency, and then they're ready to go live. So by that time, we'll have the other stuff ready for international clients. Okay. Um, yeah, well, where you already have a license, um, yeah, there are some other options available. Yep. Cool. Yeah, I mean, if you still have questions, guys, I'm happy to answer them. We've been on for quite a while longer than what I was expecting. So, and again, if you want to call to answer some questions, just pop your phone number in here. I'm going to leave the chat on here for a while because there's still some people that have requested a call. Yeah, John, I'll send over a link to the different options. Scroll through here. Yeah, thanks, Matevs. We'll talk to you guys soon. I gotta leave it in private here. I've got a bunch of emails and phone numbers here that I don't want to give out to everybody. Dean will be prank calling everyone. All right, cool. But yeah, guys, those of you who have dropped your email and phone number in here, we'll be in touch here throughout the day. And to all the regulars, good seeing you. Cool. All right, I'll leave this up for a little bit longer so you guys can finish up here and post some more of the questions. I'm just gonna shut the mic down. Thanks to all you guys who came online today and spent some time on here. Yep, awesome. All right, thanks guys. We'll talk to you soon.